Hey traders, Akil Stokes here of TradingPower.com. Wanted to do a quick video, basically reviewing the video I did last night for Syndicate members. And this video is pretty interesting because in my training course, we went over Gartley patterns yesterday, um, how to build them, rules of engagement, and the different techniques you can use to trade them. And one of the topics that came up was just throughout the training day was just being conservative. How, as traders, at least it's the philosophy that I teach and I preach. We don't need to be in every single trade. We don't need to trade every single pattern. We don't need to trade every single setup. We need to pick patterns with high probability and situations that really give us that edge over the market. And well, what a coincidence. Last night, I actually caught this Gartley pattern and put this out to my syndicate members where not only do we have essentially a perfect 222 Gartley, which is the one I teach, hitting those two 618 retracements, but we actually came up, we got filled once if you saw this. I actually didn't, but we came up, spiked up, got filled. RSI went overbought. We retested, came back up, put in a double top with bearish divergence at a perfect 222 Gartley pattern completion. And going off the theme of this past week's weekend review video, this is one of those situations where, well, the money is on the table saying, please take me, please take me. And as a trader, these are the high probability. There you go. If I get my words right, these are the high probability situations that we want to involve ourselves in. And this wasn't a big winner, nothing that's gonna you know, change my day, change my life, but a nice 40 pips and an easily executed trade. So what I'm going to do is I'm going to flash back and show you guys that aren't in the syndicate. I'll show you yesterday's video and why exactly this was a high probability trade. And that's about it. Syndicate members, hang tight in that Aussie. There's also, if I take some time to go through some charts, there's also another cipher pattern occurring on there right now at market. We can buy up or we can sell. If I can find my chart somewhere, you can see there's we have our bigger cipher pattern we've been in for a while. In the on the daily chart, there's a smaller one that's doing the same thing, double topping here on the hourly chart. So you got about 30 minutes to see. You can either enter at market if you just missed this move entirely, or about 30 minutes to see how this candle forms. Dollar Swiss or pound Swiss is still in progress, going on our way, and congratulations for those who caught it. But a nice cipher pattern winner yesterday on pound dollar. But anyway, here's a recap of yesterday's syndicate video or last night's syndicate video, which shows exactly why that euro trade was well better than your average Gartley. Hey, syndicate members, Akil Stokes here. Happy Easter weekend. Happy belated Easter to you. Right here on a euro dollar 60-minute chart, and we have a Gartley pattern forming at a very crucial area, and it's pretty interesting because this morning, well, Gartley pattern was the topic of our 12-week transformation training. Now I have my chart zoomed out because, well, I wanted to get a bird's eye look at the euro dollar and how we're moving. Obviously, you can see we are in a downtrend. We've been just taking the stairs down, lower low, lower high, lower low, lower high, and whatnot. Let me see. I don't know if I have data put up on this chart. If we go out to a higher time frame, let's say even a daily, you'll see that there's not a really powerful structure level at all until we push a little bit down. I'd expect down to the 2700s. We are hitting the top of these wicks, but 27 flat is a nice better area. As you see, we come into the close of this structure area right here, and then the close of our previous structure as well, with a nice little polar flip. And if we bring a Fibonacci in there, there may be there's going to be a 618 hiding right in that area too. So I'm pretty I don't want to say biased. My best opinion, I guess, would be that this market is going to continue down to 27 flat before we get to another decision point, meaning whether the market's going to break down and retest 21s, or whether we're going to see a retracement back up to this area 131s. Anyway, wanted to do that because I want to give you a bird's eye view of what I'm looking for. But this area right here, and we've been talking about this for the last 2 weeks in the live room. This is going to be that point on the lower time frame that really decides which direction this market is going. If this area, this structure level, can hold, then it's a good shot. We'll see down, we'll press down, at least retesting these lows, and probably go down to 27 flat. If this structure level is penetrated, we get a higher high, higher close, then the market will probably be in trend reversal, and we'll start to see a retest of these highs up here. Now, what's interesting at this point, I should say, we actually have an advanced pattern forming. It's kind of an ugly one, but if I take my Fibonacci retracement, go from X to A, swing high to swing low, you'll see that our first retracement comes up into the 618. Obviously, when I see 618, first thing I'm thinking is potential Gartley pattern. Give me my X to A to B up here at the 618 retracement. Next thing I want to do is take my same Fibonacci retracement tool, grab that from swing low to swing high. So from my A leg to my B leg, make sure I get at least the 618 retracement for my C leg. I do. We come down to the 786 and complete in that zone we talked about. So setting up for a 222 Gartley. And next, well, I want to predict my my Gartley completion. So what I'm going to do is I'm going to take an equal move of AB, put that onto my C leg, and project an ABCD pattern, which in this case is going to complete right at, or I guess already completed at 2864, which is going to be right above my 786 if I bring that in. And let me let's make this, if I can make this red to match up, and we'll make this blue. Probably should get the video out before this retest, but nah, got plenty of time. Last thing I want to do is take my Fibonacci extension tool from my A to my B leg, just as I would with an ABCD pattern. So swing low to swing high and back down, and see where my 127 is at. My 127 is going to be right here at 2869, and just to see where it's at, I'll bring in my 886, which is going to be a little bit higher, and I can bring in one more Fibonacci, my Fibonacci inversion. This goes from my C leg back to my B leg, and don't worry about this extra stuff. We're going to get a 127 right in the middle. The Fibonacci inversion, the 886, that's extra stuff. You don't need that for a Gartley completion. I'm just always on the hunt for Fibonacci confluence and how much I can get. So you see the market's already spiked up here. We have a nice area. I can delete this 886. We have a nice area between 128.69 and 128.59, about a 10 pip zone in here, which is our potential reversal zone. Now, with most advanced patterns, I enter aggressively, meaning my limit order is right on that area. This one, I was away from the markets today, so I didn't get a chance to see it. But look what we're getting. We're actually getting a double top up here as well. If you look at the RSI, you can see the RSI did go overbought, about 85 on this first test. And what we're doing is, well, we're potentially a few ticks away, about 4 ticks away, from actually getting a valid double top with RSI divergence. So keep that in mind if you're thinking about entering this pattern. Now, as always, stops need to go above the structure level. You have a nice little shelf, a nice little base to put stops above. I'd probably get around, I would get above the 129 even handle. And as far as targets goes, we can bring in our normal Fibonacci retracement from our A leg to our D leg. Predict out our 382 for target 1, 618 for target 2, and if you have a target 3, or maybe you're just a little riskier trader, maybe you have that same bias that I do, that if this level holds, we're going to push down to at least at least down here, at least 27.67 and probably 27 flat. Then this may be a case where you want to trail second targets, for extended profits or something like that. But anyway, let me get this out to you. And then get on with the rest of my analysis. But looks like a very good opportunity setting up. We'll see how this candle closes. I'm on the hourly chart. It's 8:11 Eastern right now, so I have a whole 55 minutes to watch and see what this candle does. Could be stressful, could be irritating, but guess what? That's what it takes to be a disciplined trader. I can't just jump in on impulse and assuming I'm waiting for the double top with divergence. I can't just jump in on impulse and buy it up. I gotta wait for a valid double top, which means waiting for the close of this candle. So I'll get this guys out. I'll get this out to you guys. If I see anything else, as always, I'll shoot it out. But good luck with this one. Take care.